In the high-voltage world of Indian mobility, two absolute giants are racing towards a stock market debut, ATHER Energy and Ola Electric. Now, this is a seriously high-stakes clash. We're talking technology, massive ambition, and billions in investment. And with both companies having filed for their IPOs, well, let's just say their strategies and their financials are under the microscope like never before.
So, it all comes down to this $1 billion question. Who is actually winning this race? I mean, is it the company that's selling the most scooters, the one with the fanciest tech? Or maybe, just maybe, it's the one with the most convincing plan to finally turn a profit? To find out, we're going head-to-head.
You see, both ATHER and OLA have just dropped their investor reports for the first quarter of the fiscal year. This is the raw data, the stuff they share right before their public listings. So we're putting these Q1 report cards side by side to cut through all the hype and see what's really going on. All right, let's kick things off with the most obvious metric: sales. Who was putting more electric scooters on India's roads? This is our first round, the battle for the streets. First up, we've got Ola Electric, and look at that number, a massive 68,192 vehicles delivered in just one quarter. This is a huge testament to their incredible manufacturing scale and their ability to reach the mass market all across the country.
And in the other corner, we have ATHER Energy, clocking in at just over 46,000 scooters. Now that's a really strong number, right? A 97% year-over-year growth spurt, which is amazing. But in the raw volume game, just for this quarter, Ola clearly takes the lead. And that volume, well, it translates directly into market share. If you look at the whole of India, Ola commands almost a third of the market, 31.3%. That's more than double ATHER's 14.3%. So on a national level, Ola's strategy for just pure mass market dominance, it's clearly working. But, and this is a big but, the story completely flips when you zoom in on one region. In its home turf of South India, ATHER isn't just competing, it's the #1 market leader. It holds almost 23% of the entire market. And this, right here, this reveals a core part of ATHER's playbook: build regional fortresses based on brand loyalty and quality. Okay, so selling a ton of scooters is one thing. Actually making money from them, that's a whole different ballgame. For anyone thinking of investing, and really for the long-term survival of these companies, this is the round that matters most. Welcome to round 2, the path to profit. Now, before we dive into the numbers, let's quickly talk about a key term you're going to see: EBITDA margin. The easiest way to think about it is like a health check for a company's core business. Is it making money from its main operations? If the number's positive, yes. If it's negative, like we'll see, it means it's still spending more than it's making to grow. And here it is, the financial head-to-head. First thing you'll notice, both companies are still in the red. They're operating at a loss to fuel all that growth. But Ola's auto business is actually a bit closer to breaking even, with a negative 11.6% EBITDA margin compared to ATHER's negative 16%. But look closer. Check out the gross margins. That's the profit on each scooter I sell. They're surprisingly close. ATHER's at a healthy 23%, just a little behind Ola's 25.6%. Ola actually talks about this directly in their shareholder letter. They say they're making a major pivot. They're moving away from just aggressive market penetration, growth at all costs, and shifting towards what they call balanced, profitable growth. Understanding this pivot is absolutely key to understanding their improving financial picture.
ATHER, on the other hand, is taking a totally different road to profitability. They're building a high-margin ecosystem around their scooters. A pretty significant 13% of their revenue now comes from non-vehicle sources. This is stuff like their ATHER Stock Pro software, which, get this, a stunning 89% of their customers pay for, plus their charging network and accessories. It's a really powerful and different path to profit.
Which brings us to our final round, the blueprint for the future. In an industry this driven by tech, the long-term winner isn't just about who sells the most today. It's about who is building the technology that's going to dominate tomorrow. And this is where you see two fundamentally different playbooks. ATHER is all in on being a premium brand. They're focused on quality and an amazing user experience that's all powered by software. Ola is playing a game of massive, massive scale. They want to control the entire manufacturing process and just saturate the market with products. You could think of it as fortress building versus a full-on blitzkrieg. If you want to understand ATHER's DNA, you only need to know one number: a staggering 45%. 45% of all their employees work in R&D. This just proves that ATHER isn't just a scooter company, They are a technology and engineering firm first and foremost, and that is the heart of their premium quality-focused strategy. Ola's big bet is on total vertical integration. I mean, they're not just assembling scooters. They are developing their own motors, their own ABS systems, and, most ambitiously of all, they're producing their own 4680 bar-out cell in their own custom gigafactory. The goal is simple: control every single piece of the tech stack.
And this right here, this just brilliantly illustrates their different ambitions. Aether is laser-focused on perfecting its next-generation EL platform, creating one single, scalable, low-cost architecture. Ola, on the other hand, is planning an absolute explosion of new models, from bikes like the Roadster and Adventure to crazy futuristic concepts like the Diamond Head. So, after 3 rounds, what's the final verdict? Well, it's not about one simple winner. It's about 2 incredibly powerful contenders that are executing 2 very different, very clear strategies. Let's just recap the tale of the tape. Okay, let's break it all down. Ola wins on sheer volume with its pan-India mass market focus, no question. ATHER owns the premium space and has built a fortress in South India. Financially, Ola is a little closer to breaking even this quarter, but ATHER has those strong product margins and a growing ecosystem. It really boils down to 2 core philosophies: ATHER's R&D-led premium ecosystem versus Ola's all-out pursuit of massive scale and integration. And that leaves us with the ultimate question, not just for these 2 companies, but for the future of Indian mobility. Will ATHER's premium-focused, R&D-driven playbook win out in the long run? Or will Ola's massive bet on aggressive scale and owning the entire manufacturing stack just prove to be unstoppable? The answer won't just crown a winner. It could very well define how millions of us move for decades to come.